All right, what's going on, guys? I hope you're ready for this video. It's different than the other ones. You guys don't have to stare at my chest, so comment below. Let me know which one. Do you guys prefer the screen like this? You guys don't like the other one? The other ones are easier to make sometimes, but forgive the audio quality too. My mic is tripping out, but let's get into this. I want to talk about a real big reason why this stock market is crashing, and this is, I think, a reason why people are missing. We're going to go over. I'm going to show you stuff with the volatility index, the S&P, and quite frankly, I think I found the next big short. I know that's a big claim, but I'm going to go over some stuff with you guys here. You're going to get to look at. I'm sure you guys will find it interesting. If you're new to the channel, subscribe. Stock market news, live streams, yeah, a bunch of stuff. If you guys are new to some of the, I guess if you're new to the videos, look at some of the past videos to get a context. I'm just going to discuss this topic here, as you know, it brings up many things I've talked about, but this here we're going to focus on it because it could get kind of tricky. And I have an article, I posted the link in the description for you guys to follow along with, but let's talk about it. Excuse me. People think that the market's going down, and a lot of things we've discussed is that, well, I don't know how I'm trying to lead this in. The problem is people aren't shorting the market. The biggest problem right now why the stock market is crashing is people are selling. And you're like, okay, thanks, Captain Obvious. But this is unique in the sense that you're getting outflows. You're not getting people buying back in. You know, pensions were the only inflows really this week to a degree. But it's not as if this market, you know, when we're seeing these rips, and why I'm describing this is to answer these big market moves you're seeing. These aren't short squeezes, because stocks are not as shorted as they were in October and in November. And this is what I want to show you guys, even with the UVXY. So the UVXY, or the VIX, this is the put to call ratio. You know, it's a fear indicator in the market, and how people judge that is that the higher this goes, that means there's more fear in the market. So how did people come to that, you know, determination? It's a put to call ratio. So as people buy more puts than calls, and the open interest on puts increases versus calls, the VIX is going to go up. So, and vice versa, as people close those puts, they expire, or open more calls, it goes down. So you're seeing, you know, this could also mean people are buying calls, but essentially the VIX isn't high. And there's been some people who've talked about that the VIX should be much higher. And I agree, because looking at October, the beginning of October and the end of October, and seeing those moves, we clipped there. We didn't close there, but we clipped there on the VIX. You're right around there, but now, granted, there has been time that's come along, but you look at the SPY, you know, the SPY at that time was at 2,600, 2,660. You know, right now we're at 2,490. And granted, the VIX has dropped because that's how the VIX works over time. Which again, puts in calls, options expire. So, you know, those in the value, you know, those options that have, if the velocity pretty much of this downturn, if it doesn't keep going down and down, you know, that's where the VIX adjusts. And that's why I say be careful with these levered ETFs, and that's what people mess up on. But you see, it should be higher. So then this led me to look into the outflows, and I've been seeing stuff like this, and I just saw something, and this is what's interesting, because I was looking to get you guys, I was trying to find the ticker to show you the outflows. There's a few, like here's, where is it? Oh man, I can't find it, but there's tickers that you could look for. You get them on Bloomberg. You could just search them up even without a terminal or anything like that. And you can monitor this through even like wallstreetjournal.com, nasdaq.com. It's just a lot of the you know, click around the buttons. I'm gonna get you guys a tutorial on there. You're like, all right, thanks, Josh. But I don't want to get off track. What am I saying? Topic with this. But this is what I came across, and this is when, out of all the outflows that have happened, it's been from loan funds. So as we see here, U.S. loan funds saw 3.5 billion exodus, a new record. This is an all-time record for consistent outflows. This means people are selling and selling and selling and selling. And even here, this is the monthly U.S. CLO activity. This is the collateralized loan obligation market. So this is what I'm going to share with you next. So this is what I think is the next big short. Collateralized loan obligations, it's literally the evil cousin of the big short, with collateralized mortgage obligations or collateralized debt obligations, the CDOs. These are CLOs. So we're going to talk about that, but this is it's pretty much gone frozen in December, and why this is important because go Google CLO market. Anything in 2018, a few months ago, people were starting to talk about the worries, but it's been a record year. Even companies like Wells Fargo issued 150 billion this year. So this is what I was talking about because some people like auto loans, this and that, because now we have auto loans, but now the CLO market, it's pretty big. It's only about the 10th of the size as the mortgage crisis then, but it I think this mixed in with other things gets interesting, and now it relates. I said this a month ago in a different video. We're going to once you understand what the CLO really is, it'll kind of things are going to start clicking, especially with what I'm saying with oil, energy, and all that. But pretty much this is a record, another one of those record outflows. Again, you're seeing record selling, but this is the problem that I'm trying to explain is that people are selling. People are worried, and investors, what's worse than shorting the stock or the markets crashing is that investors lose confidence. And that's what happens in these, bull market, this is what this is what I said, this is what a bear market looks like, because when you put it into perspective, investors don't like this. This is, we could take a loss, but when you're going, you're starting the week. I did this, I think, on 7 days with there's a SPY, but do it with Amazon or something. You're in here at 1500 or 1540. Then 2 days later, you're at 1430. By the middle of the week, it's at 1300. Then it's back up to 1480. Then 1512. Believe me, the 14-day chart's even worse. Imagine what these people are going through with these dips and rips, but investors lose confidence, and that's that's the worst thing that could happen. That's what happens during crashes in a recession. Investors lose confidence, is that they don't want to be in the middle of this, and then this gets scary. They pull out and they don't come back in. You'll see outflows and then inflows. We've seen stuff, but they're not going to be eager to come back in, and that's because they're not confident. So that's what's happening here, is that the big thing I think people are missing is investor confidence is collapsing. As if the markets persist in this way, you could see stabilization, plunge protection team. It doesn't matter if this is how that they call the plunge protection team. It's not going to cut it for investors, because this isn't going to increase confidence. You don't want to see record moves followed by record losses followed by record gains. But again, so here it is. This is everything going on with the market, or this is what I'm thinking it is. But now for the CLO, here's the link I have, but it's literally the evil cousin of the mortgage-related bonds, but they have a bunch of good facts with it. And this is this is a good thing. They say the process of issuing loans, packaging them together, and carving them into investments has many names: securitization, structured finance, even shadow banking, which I talked about in that other video. But this is what I do. I sell these. We give loans to people. We issue the loan. It's backed by the property. Now, this is what they did in The Big Short. People still do this. I still do this today. You issue the loan, we fund the loan, we give the loan, now we own the note, and then we go and we'll still do 50, 100 of those in a month, and then obviously not as much right now, but we'll go and take them and then sell them to a hedge fund, a pension fund, a family office, anybody who wants a fixed yield. Because think about why investors buy them, is because it's just a guaranteed yield. You could buy a mortgage note. It allows you that it's secured by the property. You collect the interest. You don't have to pay taxes. It's great. Investors want these. So this is what happens, is that those are mortgage obligations, what I just explained. But now with a CLO is the collateralized loan obligations, and pretty much it's more broader. It's not debt. So even though it is debt, they're giving out loans, but it's collateralized by the company. So what they're really doing with CLOs, instead of giving loans to individuals to buy homes, they're giving loans to companies. And the thing is, with CLOs, these companies are usually already have bad debt or bad. It's a bond on steroids, pretty much more beneficial for the company, and they give it to these companies. So they're loaning out to businesses, and now these businesses engage in, you have like Santander and all the auto loan companies, but then you have the shadow aspect. You have now random companies that are getting these loans, and they're giving auto loans, and they're giving all sorts of loans, but pretty much it's a bunch of risky companies. And now this is what my main point was when I related it to a few weeks ago with oil. I think there's a bubble in energy and oil, and that could lead to that could be that bubble that we're looking for. I talked about it, but this makes sense because the primary beneficiary of CLOs would be them. And, it's showing you how surge. CDOs have shrunk since the crisis, and these CLOs have kind of taken over, and it's almost getting to that $1 trillion mark. But you get to see that this is that the companies with junk level ratings that have taken out the loans. It's insane, But go through all this, you guys will get to see. And pretty much the last part they talk about is like the covenant lights and how some of these pretty much the debt isn't as secured, and it's much less secure than a bond. But essentially, this is what's happening in that usually you had firms, and like going back to the CLO market in this data, the issue going on right now is that there's always been people willing to buy it, but who's going to buy these loans? Because that's what a CLO is now. They loan out to companies, and these companies loan out to other people, and it's just a mix of auto loans, random interest streams from loans, all packaged together, and then they sell those to hedge funds and people. So it's investors. Investors have to buy them. So if the banks aren't stepping up to buy them, they usually come in to step it up. But now with no other people willing to buy it, and investors, they need to sell it to investors, it's kind of creating an issue. And that's why we've seen outflows. And I think the problem with the banks coming in to step in is that if nobody steps in, it's hard when the prices are fluctuating of these loans to sell them. They're trying to sell these loans, but how can you, if the prices are fluctuating, what that does for the banks with bigger ones, it's crazy. So I'm going to go Michael Burry on this. I'm going to start looking at bank filings. If you guys want me to document the process, maybe if you guys want to help out, I could assign you to some stuff to look at. More eyes are better, but I think this is interesting, and I think you guys should all take a look at it. So I'm going to post the link below. Hopefully this helps. Let me know what you guys think of this video. Let me know what you think of this style. Show me some love. Subscribe, like, be on the stream. And, yeah, have a good weekend. Be safe. I love you all. I don't think I'm going to Vegas. I was supposed to go, but I'm yeah. Love you. Bye.